You're watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Kearabilwe Nonyana from Shoprite Africa and Grant Nader from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or an X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. I am rather pleased with how the JSE is doing and has been doing, and even the Rand. So our local market really firing on Kearabilwe, even with all the rest. It's the 7th of August and nothing major has happened. Why is the local market this strong?
I feel like you're like most of our clients, a bit jittery about what's happening and essentially not finding firm footing. And the market is on firm footing and it continues to go stronger. And I think I was reading an interesting article that details for the past 123 years, the JSE has been one of the best performing stock markets, except in 2024 when the US surpassed it. And I think it's that natural hedge that we have because we have precious metal miners on our bourse, such as gold and palladium and platinum, that essentially kind of insulates us and gives us a natural hedge and gives our market an opportunity to perform. Because if I had to give you our GDP numbers and have to give you credit growth rates, I'll give you any other hard statistics about how the economy is doing, you'd tell me that I'm lying if I tell you that the all share is almost at all-time highs. So I think it's part and parcel of the fact that the market has truly decided to look over the Trump tariffs and carried on its merry way, because even global markets are doing quite well.
Do you know what? Now the miners are actually giving me what the tech companies are giving the S&P 500. Is this how you're looking at it, Grant, or do you think that there's actually really deep value just on a broad context on the JSE?
No, look, the miners give you a lot of value, but only at certain points in time. Like in the 2000s. But if you look, that statistic of how we've been the best market is quite amazing if you think about it. Because those of us who've been around for the last 10 or 15 years, since 2010, really, you wouldn't think so for all the money in the world. But this global composition, I think Naspers process counts a huge amount. I mean, that continues to power ahead. If they were at all-time highs again, remembering the benefit from Tencent. And then commodities, yes, gold and precious metals are getting going. They really have. Gold's led the way, and the others are starting to look interesting. We have a wonderfully diversified index. So if you're invested broadly in South Africa, you've been saved by all these things that don't earn money in South Africa. And you never know. SA could turn the corner, and then everything in South Africa could be a little bit better. It's all pretty cheap. And suddenly you've got even more cylinders firing, and then this market could power to continued new highs. I'm quite optimistic overall.
Yeah, well, a cylinder that wasn't firing today is TFG. It ended the day down, I think, almost 6%. I think at some point it was down 8%. I don't know. When I was looking at those numbers, I was like, for me, it didn't match with how the market reacted. Did you think that this was a justified reaction from the market, or maybe a little bit overdone?
I think overdone. I just think where I put clothing retail is cyclical stocks, and essentially you just need one bad season of fashion choices, and then and essentially you see it right across your margin integrity. But overall, I think TFG's results were not that bad. Great growth in online sales. I mean, the credit book is looking great. The acquisitions have looked great as well. London is doing great. I mean, I don't know what the market was expecting from these results, but it really took some pain and saw a lot of selling.
Yeah, and actually I also highlighted earlier on in another conversation that it's quite interesting because these numbers came out the day after we got a report about Temu and Shein taking more market share in South Africa. So at this point, as a TFG investor, Grant, what should you be looking at?
Well, first of all, I'm unfortunately not a TFG investor. I think It wasn't a horrendous result, but it also wasn't great either. They're struggling much like we've seen with Woolies and Country Road. The UK was disappointing if you took out the acquisition. That's going backwards as well. There was a negative revenue growth there. And then if you look at SA, they lagged their peers in terms of growth. And so, I don't think it was a stellar performance. And I also think you can see they're opening the taps on the credit book to try and drive some revenue growth. So the credit book's growing, and it's not really translating into earnings, into revenue growth that's of any meaning. So I guess the one thing they are doing well is their online offering is incredible. They are getting it right. They're probably one of the few in the SA fashion retail space that's getting it right. So
Yeah.
it's not all bad, and I think the market probably overreacted. But you need the macro to come through. You need the consumer to get better. You need the interest rate cuts to start coming through, for these discretionary retailers to sort of turn the corner.
Well, actually, there's a question that just came in. Does the panel feel it could be a good time now to get into stocks like Shoprite, Woolworths, Mr. Price? I guess we're grouping all the retailers, but actually, I don't know if it's wise to group all the retailers in there, considering that not all animals are equal. Kearabilwe?
As you said, not all animals are equal, and some are more equal than others. And what I mean by that is that the top of those, whether in food retails or clothing retails, are just such high quality businesses. I mean, you look at the likes of Shoprite. I mean, they essentially are growing in the 60/60 business, the online business, and it's leading to revenue growth. And I think the thing is that it's the vertical integration across all LSMs that Shoprite has, and essentially that gives them quite great pricing power and great distribution in order to essentially eat the competitors' lunch. And if you had to compare the rest of the other food retailers, they don't look as great as Shoprite because of the fact that Pick n Pay has Boxer, and Boxer does well in one LSM, but not in the rest. And you look at Woolies, it's great at the top LSM, but even when you look down, it doesn't have that advantage, where essentially Shoprite has it right across all LSMs. And essentially, as I said, some animals are more equal than others, even in the food retailers.
Yeah. Well, actually, I mean, when was it? Yesterday or the day before, Shoprite came out with a trading update. Not a lot of reaction from investors, and there's actually a specific question here on Shoprite. The experts have been recommending Shoprite. If it pulled back below 300, it's now below 260, well, I think 270 now. But the question goes, should I double up? So you already own Shoprite. Would this be a good time to be adding more, Grant?
It's good. Depends, I suppose, where you made your first purchase. If it was at 265, you can probably wait. At 260, don't rush in. But Shoprite is one of those companies should be in a South African portfolio because, as Kearabilwe said, it's high quality. They've got some organic growth. They've got a clear strategy and a clear rollout plan, and they're executing incredibly well. So it's a stock we'd be comfortable to hold, and we are comfortable holding it. So yeah, I would buy more, but I would wait. You want to average down if you're out of the money on your first buy. So wait for it and nibble away. I think over time you can hold on to this one.
All right. Well, let's go into Raubex. Raubex has produced excellent results for 2 consecutive years now, yet the share price continues to disappoint. Any reason for this? Looks extremely cheap. Kearabilwe, what do you make of this mismatch? Has it been like this for a while, or is it recent?
Yeah, no, Raubex is in an industry which is really not necessarily very great, and I think it's but a reflection of the industry on construction and materials more than anything else. It's too small for us to cover, but I mean, I broadly speaking, it's the sector that I think has not really done well. Even though the fiscus has announced that they are going to be expanding public works and essentially increasing investment into fixed capital expenditure, I think it's not a sector that I'm really bullish about. But even recently, even the non-executive chairman has started selling down his position. He sold, I think, 10 million odd worth of Raubex. I think it's part and parcel of that weakness that he's selling into as well. And if management is not believing it, why should us as the market?
Yeah, it's actually quite interesting because, yeah, I think this is a common narrative that the construction industry is just not one that people are really into. But Raubex has continued to be the star of the show. I do know, when was it, a few months ago when the share sunk a lot because of some investigation that was going on where a whistleblower was involved. But I mean, I think that was resolved. So it's quite surprising that it hasn't actually come back as much as I actually would have expected. Grant, your take?
Yeah, I think many South African investors have been burnt, and we're quite wary of any whiff of corporate scandal. So that whistleblower report came out. It was cleared of the investigation, cleared any wrongdoing, but you have to still, in the back of your mind, you have an extra layer of caution. So that could be a part of it. You know, you don't rush back in. The other thing is they're so dependent on government getting its act together and actually moving on the infrastructure rollout and deployment. So that space, that whole space, they're well positioned. They're one of the better executors. But ultimately, we need to see government really get its act together and to grow the broader construction industry, and of which they will be a beneficiary.
Right. Well,
But I mean, they remain one of those
yeah.
cheap value industrials in South Africa. There's a whole lot of them in the mid cap, small cap space, and they're not going to go anywhere until the bigger economy gets moving.
Well, here's a very interesting question. I want to buy a share that is undervalued and can be the next Naspers. Well, let's actually start there, Grant. Would there be a stock that you're looking at that you're really thinking, oh, this is the one?
You know, because you're saying Naspers, you got me thinking technology and innovation. I'll tell you what looks quite impressive, and it's not clear that it's a winner, but there's two little stocks that I like. The one is capital appreciation. We've talked about that before. They've got two main businesses. One is software and consulting, and the other one is their point of sales and the accompanying software and management around that. And I think that's a good little business. It's cheap, a lot of cash, good management. So I like that one. And then Lesaka Technologies is an interesting story. They really are building scale, and they're on a sort of roll-up acquisition trail. There's always risk with these grow by acquisition stories that you don't integrate properly, and eventually the wheels come off, as we saw with EOH and the like. So there's no doubt there's risk there, but if they execute well, it looks like a story that's gaining some momentum. I think it's interesting, the opportunity for them. So that's one I keep an eye on.
Okay, and yeah, specifically in the technologies, and I mean, we don't really have a lot of these like technology companies on the JSE. When you look at a stock that could have as much growth momentum as Naspers has had, Kearabilwe, do you think there is one on the JSE, and maybe just even outside of that tech sector?
Yeah, no, on the JSE, I mean, it's hard. It's a really hard question to answer because I mean, Naspers, Tencent has just organic modes. I mean, first of all, such a huge market in China. Whereas, I mean, South Africa, if it's just going to be operating in South Africa, you have 60 million people. But I think offshore you may find some small gem. I mean, I'm looking at something like SoundHound in the AI, SoundHound AI. It operates in the voice assistant artificial intelligence. Small little company. I mean, it's only $4.5 billion. But I mean, I think it's in terms of where the voice assistants are going to go, in terms of how we interact with Siri or interact with other voice assistants. So this is the technology that's going to essentially enhance that. And looking at how AI is going to really revolutionize how even our homes are going to be, for us to have voice assistants even connected to our home appliances. I think this is a small little niche company that I think has really great potential. I think right now it's still in development phase, but I think this could be the next big AI company that might revolutionize the tech world like Tencent.
Very interesting. Definitely got my ears open. Well, Grant, let's get on to telecoms. There is a question on Blue Label. I actually want to start off with MTN, where we saw quite a big movement on the share price today. And it's interesting because you gentlemen have been talking about how, there are some companies, some sectors that will only start really performing once the economy gets going. But interestingly, I saw MTN talking about a robust performance from them because of improved macro conditions. Just talk to me about the backdrop that MTN is working with here.
So MTN has done, they've really come through a tough time. And if you go back a year, Africa was going through hyperinflation across most of the economies that they operate in, Ghana, Nigeria, and a number of others. That was a huge impediment. Then they had regulatory pressures. The regulators did not allow them a price increase for a number of years. And then, of course, the currency devaluation was explosive as a consequence of all that hyperinflation. So Nigeria was in a very tough space, and that was by far, that was their biggest single market. It was over 50% of earnings at one stage. It's no longer there, but it's still very material. And that's turned the corner. So it does talk to you as an investor when you see when things are very bad and they just get less bad and they start to improve. That's where there's a lot of opportunity. Of course, you have to know if things are going to get less bad or if it's just a value trap. But of course, there's a lot of tailwind for them now. Ghana's doing well. Nigeria is doing really well. The currency is stabilizing. Inflation is stabilizing. And so, and that got approved for tariff increases. So they had all of that coming together from a very low base, and the stock it's more than doubled. It's been a huge win over the last 6 to 9 months. And they came out with a strong trading update today that surpassed, I guess, everybody's expectations, which were already quite high given the share price. So it's been a good story. I thought I thought it would take longer and it would be harder, but the turnaround has been quite impressive.
Yeah, and Kearabilwe, I mean, it shot up from being very unloved to being very loved. Do you think that they deserve more love, and and that we could actually see momentum continuing on the share?
Well, the question I have to myself and my team would be, is this just luck in terms of, or is this truly great management execution? And essentially, they operate in macroeconomic environments in which sometimes you just get dealt a bad hand. Yeah. And MTN has just been dealt very bad hands just purely because of the markets that they operate in. I think in their strategy to go and garner essentially subscribers, they went into markets in which essentially the macroeconomic backdrop does not look great. So as they said, the macroeconomic backdrop just slightly changed and their fortunes changed. Overall, I think it's a great company. I think the fintech unit is one that really, I still feel like is the gem, is a crown jewel within the stable. And I just think in terms of mobile payments and mobile finances, they stand far ahead of M-Pesa because of just purely the number of people that they have who are on Momo at the moment. Would I be touching it right now? I think as a whole, the sector has done very well. But I think there's more stable counters without any surprises, such as a Vodacom that I'd have as a bedrock in my portfolio.
Well, one telecoms company that a lot of people have overlooked and people are starting to take notice of is Blue Label Telecoms. The question says, Blue's flying. How much higher can it go, Grant?
Look, to be honest, I don't know. I missed this one. What they did well was they've cleaned up the debt in Cell C. They're dressing it up for potential listing. And so they're putting their best foot forward on all these things, and it's repricing accordingly. There's a lot of hype, and it's been an impressive story. I think it's done 280% in the past couple of years. It's phenomenal. I don't have the conviction in management. I give them credit for what they've done, but I don't have enough conviction to buy this here.
That's so interesting. That's so interesting because I mean, I guess people have agreed that the core business is solid, and really the jitters were coming through with Cell C. But now looking at these developments for Cell C, Kearabilwe, is it not enough to bring back sufficient confidence, or are people just still hung up on the kind of mistake that they made with Cell C?
I mean, there's a lot happening with the stock. I mean, these special purpose vehicles, debt moving from one place to the other. I mean, the execution risk is too high on Cell C for there to be a lot of confidence that the management will get it right, as Grant said. But I think, it's also a confusing business model because one is really cash accretive and one is the other business in Cell C is debt laden and it requires a lot of attention. So it's really hard to put your finger on what they need to get right because them selling vouchers and airtime and selling electricity vouchers has really been a good business. And I think the Levy brothers can tell us that they've done well for themselves. I just think Cell C has such high execution risk that I can't put any pound on that for me to be able to say that. They might get it right. I mean, they've gotten it right so far, but I mean, I don't have the same conviction that Grant has no conviction. I have no conviction, but it seems the market has conviction on the stock.
Yeah. All right. I hear you. All right. Before we get to your stock picks, let's talk about Quilter. Based on Quilter's performance, with the panel advise on accumulation for the long term. Yeah, actually, they released an update or results yesterday, and they looked pretty good. Grant?
Yeah, this has been a great business with a great management. They've turned this business around. They rebuilt their platform. They do that wealth management platform. They've got now about 126 billion pounds of assets under administration, I think. That's a big number. It's not the same as management fees, but it's still under administration. And then they've got another 30 or 40 billion pounds under management. They've done a good job, and they're competing in a very competitive space. So I think this is a good business. I think it's a good management team. Would I buy it here? It's done a lot, and I think you're going to get nice beta market carry here at a good price. But I would probably sort of align my buying of it with the market. So the markets have all had a very good run. If you think there's a digestion phase coming, and I probably do, I'd probably wait and just sort of buy. Hopefully you get a chance to buy on the way down.
Yeah.
Or make a start here. And I wouldn't buy it all here. That's kind of what I'm saying.
Yeah.
So buy some and have a look. Long term, I think it's a good business.
Okay, yeah, and it has taken a slight dip. Kearabilwe, your take on Quilter?
I think I concur with Grant. I mean, a great business. I think when markets are doing well, people who run any markets business, you'll see it in the bottom line. I think what they have done is essentially, as Grant said, have fixed their platform, even though in the space they're operating and the market they operate in, it's very competitive. I think, as Grant said, right now, the market is at all-time high, and essentially you get that effect of that beta effect of the market going up, and essentially AUM also going up, and fees also going up, fee revenue going up. So, I mean, at the moment, you might find a better buying opportunity when the market does re-rate, and essentially some profit taking comes off all global markets at the moment.
All right. Well, gents, let's take a look at your stock picks where you are finding value today. Grant, what are you choosing?
So I'm going with SAP, which is the German software and cloud company. So we all know they've been around many years, but they've always been a software company, license-based. That model is changing, and it's having to adapt rather quickly with the advent of AI. So they're moving their model toward a cloud-based model, and I think that's really good pivot. The order book's building, and there's a transition phase. But I think if you see a world where sovereign AI and sovereign security of data and cloud is important, and I think Europe is going to play that game. These guys are pivotal. They're one of the few European champions around cloud and enterprise AI and enterprise cloud. So I think there's a long runway for growth here, and I think they're doing a good job of transforming that business. So that would be my pick. I'm excited about the opportunity there.
All right. Kearabilwe, what are you excited about tonight?
Yeah, what I'm excited about, man, is just a momentum play more than anything else, and just a trend following. I just think the Chinese tech sector is prime for great earnings. Looking at where the analysts are saying that they expect like 5.1% growth in earnings in the next reporting period, and I'm just following on from the Wall Street and the streets reporting on all the Max 7 as well as all the tech companies giving earnings beats, and I think you'll see that filter through to the Chinese market where there's a bit more value. Even though that market was also run, I just think right now the tech sector, which is heavy in the iShares Core CSI 300 ETF, is heavily tech sector led. But I think you'll see that earnings also follow through. So that's my pick for the night.
All right. Well, thank you so much for your very valuable insights and analysis today, gents. That is all for tonight's Stockwatch. Thanks to our guests, Kearabilwe Nonyana from Scope Prime Africa and Grant Nader from Benguela Global Fund Managers. Up next, the close. Stay watching.